All right, ladies and gentlemen, welcome to my YouTube channel, and it's a pleasure having you here. Today, I'm going to be covering a very basic beginner forex trading course. Okay, so if you're a beginner out there and you're looking for where to start, you can opt for this. And yeah, for all those newbies out there who are trying to figure out, what is forex and how does it work. um, I'm going to make a couple videos. This it will be in series or parts. I think there will be around 12 parts, so all lessons. So make sure you watch each and every lesson. Okay. All right. With that being said, please subscribe to my YouTube channel, turn on notification, and like, share, and comment. All right. So let's get straight to it. Okay, so what is Forex? All right, Forex stands for foreign exchange. Okay, the letters FOR stand for foreign, and then the EX stands for exchange. All right, and it's just the trading of one currency for another. And I believe this could have happened to some of you here. Let's say you're going on a vacation or tour or visit to another country. Let's say you are in Japan and you wanted to go for a holiday in the United States. All right, you will be required to sell the Japanese yen, which is the domestic currency of Japan, for the United States dollar, because that's the currency that you will use while you are in the United States. Okay, and that explanation is more physical, but what you will be doing as a forex trader, you will be doing this online. All right, so it will be happening online. All right, so let's move on. So who trades forex and why? All right, so we have a couple of players, and let's go ahead, begin. So beginning off, we have central banks. Central banks are one of the players who trade forex, and the reason they trade forex, this could be, let's say, if a domestic currency appreciates or depreciates. All right, they might intervene to make sure they stabilize that currency. Okay, they might come up with measures to make sure they stabilize the currency. Okay, and central banks examples we have, like the, let's say, in Canada, the Bank of Canada; in England, the Bank of England; and your domestic central bank. All right, those are some of the examples. And we also have banks. Banks are also one of the players who trade forex, and the reason why they intervene in the forex trading is to provide liquidity. All right, so we have examples like JP Morgan or Goldman Sachs or any other bank. All right, then next we have corporations. We have corporations like Toyota, all right, Microsoft, Apple, or any other company or corporation. Okay, and yeah, like an example I can give you is, let's say a company like Toyota. All right, let's say it wanted to source for spare parts in a foreign country. All right, let's say they wanted to buy spare parts, let's say from China or India, and Toyota is a Japanese company. Let's say they were in Japan, so they will have to exchange the Japanese yen once again. Let's say they wanted to buy the spare parts from India, they will exchange the Japanese yen for the Indian rupee. All right, because that's how they'll be able to trade or to buy those spare parts in India. All right. Then lastly, we have retail traders. Retail traders like you and me. All right. All right. So still on who trades forex and why, we have this illustration. All right, to give a more elaborate picture. All right, as you can see right there, in the center of everything, we have the central bank. All right, and central bank is connected to major banks. As you can see right there, it's connected to the major banks, like I talked about in the previous slide. And then from the major banks, they are connected to commercial companies, large speculators, investment funds, All right, and major banks are also connected to the market maker. All right, and brokers. Okay, and it's from the market maker and the broker that we as retail traders access the market. As you can see right there, it says ENC broker. I'll talk about this in the upcoming lessons when I talk about the brokers. But as you can see right there, it's from these brokers that we retail traders get access to the market, broker or through a market maker. All right, so still on who trades forex and why. So we have this forex market hierarchy. All right, as you can see right there, we have major banks on top of the chain. Then we also have electronic brokering services. Next in line, we have medium-sized and small banks. Okay. Then we have retail market makers, retail ENCs, hedge funds, and commercial companies. Then lastly, we have retail traders. Okay. Again, like you and me. All right. At the bottom of the chain. This right here is from the website Baby Pips, so you can go and check that out on your own. All right, so let's keep it moving. So what are some of the advantages of trading forex? All right, the first one I'll talk about is high liquidity. There's high liquidity, and what this means is we as retail traders, we do not move the market. Okay, the market is moved by the other players I talked about. They say banks, hedge funds. So with high liquidity, you're not worried whether you entering the market at the right price or the perfect time. Okay, because the liquidity is moved by other players. That's what this means. Okay. The next, we have low barrier to entry. All right, there's low barrier to entry unless your country maybe is banned or you don't have the right documentation or paperwork. Then you might not be able to trade. But if you have the right paperwork and your country is not banned, you should be able to trade with ease. All right. Then better risk management. In trading, as you will find out, you are able to state um, or declare how much you want to lose per trade. All right, you can be able, through using lot sizes, you should be able to manage your risk. All right, like for per trade, that's what I mean. So for every trade that you put up, you can be able to say, okay, for this trade I want to risk this much. All right, this is what that means. All right, like I'll explain this more in the upcoming lessons as we keep going. And um, then this other point, you can trade anytime you want. All right, the forex market is open 5 days a week, 24/7, so you can trade anytime you want. Then lastly, we have low transaction costs. Um, Unlike other industries, like let's say shares, in trading, there are some costs, um, like spreads and commitment fees. Um, Unlike, let's say, a fixed cost that you will have to put up in other industries, if you get a good broker, you should be able to, pay, or you should be able to. That broker should be able to give you a good spread, right? With good spread, I mean a low spread, which you can which can later translate into low transactions, because I'll talk about this later when it comes to brokers once again. But what this means is if you get a good broker, you should be able to have a low transaction cost, right? All right, so a quick recap on what we just talked about in this video. We talked about forex trading, and we said it's an exchange of currencies. Then we also talked about the different players that trade. We talked about banks, corporations, retail traders. Then we also talked about the advantages. All right, as you can see right there, high liquidity, low barrier to entry. We talked about better risk management, trading anytime you want, and a low transaction cost. All right, so we've come to the end of this lesson one. Yeah, I hope I'll see you in the next lesson. All right, bye.